This presentation is an overview of long-term care, but every situation is unique. At the end, we'll provide our contact information. Please feel free to reach out to us with any additional questions, and we'll be happy to help you. So let's get started. Maddie, why is the topic of long-term care such an important discussion?
Well, Brittany, Americans are living longer. The longer you live, the higher the probability that you're going to need care. Right now, 70% of Americans 65 and over will need some type of long-term care during their lifetime for an average of 3 years. Having the long-term care discussion is critical. A long-term care event is more likely to happen than not, and failing to plan for it, more often than not, results in crisis management. And by that I mean, how is your family going to handle this event? Assume your illness or disease or accident results not only in your needing care, but you're not able to be part of the solution. Your spouse and or your children have learned, as Brittany said earlier, that TRICARE and VA don't pay for long-term care services. So how will dad get the care that he needs? And if that answer isn't family caregivers, how will the bills for care be paid? Can dad's income support a caregiver expense? If assets are needed to be used, which ones and how long will they last? Now, I know that there are folks whose response to the statement is, well, I have assets, so I'll just pay for care if I ever need it. And you know, Brittany, that's a really nice statement, but it's not reality. In my experience, when the need for care comes about, no one, no matter their income and no matter their assets, want to pay $5,000 or $6,000 per month to have someone help them. It goes against every grain of their existence. So what happens? The spouse becomes the full-time caregiver, a role that's demanding, difficult, and relentless. There are a plethora of studies available online that discuss the very topic of the health effect of caring for a spouse or a parent. So while using a spouse as a caregiver is a potentially attractive alternative to formal care, the real cost comes in the negative impact on the mental and physical health of the caregiver. But sometimes maybe it's really not about the money, but about denial. Denial that you need care. Your spouse will likely play that denial game with you to spare you the truth of the reality of the situation. So the spousal caregiver solution seems to be, initially anyway, a good solution. It's cost effective, and maybe no one will notice that dad is failing. Mom is covering up. And oh, by the way, it's a quick and potentially easy solution for the kids too. Mom is home all day and retired. Seems perfect, right? It's only perfect for a short time, and then things start to crumble. I've seen it happen many times. But if a plan is in place where the care is already paid for, like long-term care insurance, it's much more palatable for the spouse in need to get the care when it's needed and therefore alleviate the burden on the healthy spouse. After all, didn't mom and dad buy the policy for this very situation to lessen the burden on that healthy spouse? Let's take a look at this slide that really tells the story. I'll admit that this slide is a bit dismal, but better to address reality when you do something about an outcome versus when it's all too late. So, how will you die? About 7% of us will be lucky enough to experience a quick and sudden death. Again, only 7%. The other 93% of us, not quite as lucky. Those deaths will take time. Terminal illness, 22%. Organ failure like heart, lungs, kidneys, about 25%. 46% of us will die slowly due to frailty. Every day, week, month that goes by, our bodies will continue to wither and will become dependent on others to assist us with those common and everyday tasks. Now, not all of those that are not within the 7% of sudden death will need long-term care. Let's look at those statistics. I like this grid because there are few words, but the picture tells the story. This first grid is the probability of your becoming hospitalized for a major operation in your old age. That's about 8% of us, 105 and 1,200. Chances are good that you'll not be a red dot. Let me just say here that although the odds are very small, no one would give up their health insurance even after looking at this grid. Now let's look at the second grid. A sea of red. The grid shows us the odds of needing long-term care as we age. That's 70% of us. 70% compared to 8% for a major hospitalization. And do you know which one is more expensive? I mean, comparing the cost of a major operation to the cost of needing care for an average of 3 years. Well, it surely depends on the type of operation, but let's suffice it to say that they are both very expensive. Why then are folks not willing to self-insure health care, but are often readily willing to insure their own long-term care? Again, we're talking a difference between 8% versus 70%.
Wow, Maddie, that's a staggering statistic. I think especially when you see it illustrated in this chart. There are plenty of reasons to delay planning for long-term care, but people who have started on this path have good things to say. They feel more in control and less worried about the future. They've made important decisions about where and how they want to live as they age, who will care for them if they need it, and how their financial resources will be used to cover the costs. Another reason to start now is that long-term care can be a little complicated, but with time on your side, you can take the process step by step and figure out what's best for you. The perfect place to start is with a financial plan developed by a certified financial planner. A financial plan helps you define all of your financial goals, including long-term care, and charts a path to help you achieve them. It's the roadmap to a secure financial future.